Good morning, everybody. Hey, welcome to this Wednesday. It is D-Day because today we have interest rates coming out this afternoon. We'll see what that looks like after a mixed day yesterday. And Mr. Dave joins us here in just a few minutes. Before we do that, though, let's not forget that in this world we live in, there are so many things that are out of our control, like what happens overseas, what happens in Washington. But you can take control of your investment portfolio by knowing the amount of risk you have versus the amount of risk you should have in your portfolio. And that's why I developed the core retirement design. Give me a call at 863-382-0037. Schedule your core retirement analysis. Hey, with that, we got Dave coming up next.
Oh, 5.7 Light FM. Witness there, and I'll always love you. We're at 76 degrees now. Sunshine in the hood. Gorgeous day today. The chance of rain is only about 1 in 3. What do you figure the chances are of a great, big, fat butt cut in interest rates today? Investors are counting on it, it looks like. Let's check in on your money and see what's going on with the help from Phillip Statler from Statler Financial Services in downtown Sebring. I gotta wonder, Phillip, they're expecting a full half-point cut from the Federal Reserve at 2 p.m. this afternoon, and I'm thinking they're more conservative than that. We may have a disappointment. What do you think?
Yeah, I just don't know. I just don't see it, Dave. I think that if a quarter point comes out, that's going to move the needle. I mean, it may not be what the investors and traders want, but I think it's probably what the economy needs, if
Yeah, I guess.
anything.
And that's kind of what strikes me. I mean, you and I have been noodling through it now for the last week and a half. Public reaction to a half-point cut indicates the Fed thinks there's really dark times that are at risk, so consequently it communicates something you don't want to. I keep saying I don't think any Federal Reserve chair has the gonads to affect a presidential race the way a half-point cut might, and some of the economists out there are saying a half-point cut could really screw up the blue chips and actually cause a market decline. So, I mean, like I said, a half point makes some sense. We're heading toward that soft landing, but we aren't there yet, and I'm kind of thinking that it's on the weird side. Yesterday, it was, well, except for the Dow, it was an up day on Wall Street. Standard & Poor's was basically flat. The 500 went to up a buck and a half. NASDAQ was up by about 36. The Dow was off by about 16, and I'm thinking that probably was weighted down more than anything by Boeing, who's figured out that they can't stop crashing airplanes. So now let's just crash the whole company and have all their union workers on strike, which put them right down next to their 52-week low. Those poor birds can't win, can they?
They really can't, Dave, and that's unfortunate because we need them to get things right and to start, doing a better job of quality control and building things that will keep us in the air. And so, and I'm sure their workers would like a little bit more pay as well. So, they've got a lot of issues to deal with.
Absolutely. And just to give people an idea, I mean, we talk about Boeing and, oh, geez, it's just one stock. I mean, Boeing is in that line of work where they get an order for 5 new planes. It makes a material adjustment in the national durable goods figures. One company getting an order for a few new planes changes the national picture on the durable goods orders you and I quote each year. That's how dang big airplanes are. So, yeah, when Boeing catches cold, a whole bunch of other parts of the economy, well, at the very least, get a case of the flu. So, yeah, we're cheering for them for a whole bunch of reasons that have to do with our pocketbooks, let alone airline safety, right?
That's right. We do. I mean, that's a huge company, and you're right. What they produce is very, very expensive, so it can move some of those numbers.
Yeah, it's one of those rare times where one company can actually move a national needle. Before the markets open this morning, got a few pieces of government and private sector data dumps. First of all, new home starts up by 9.6% last month. That was a pleasant surprise. And you found the building permit counts, and it was also a number that beat the street. That's a good indication for the housing market, a big part of the economy.
It is, Dave. And on top of that, yesterday morning, after you and I got off the air, the home builder confidence index came out, and it was 2 points higher than what it was last month, up from 39 to 41. and better than expected too. So that was some good news in that whole industry.
Absolutely, because a lot of those guys have been one step shy of jumping out windows for the numbers that they've been getting on building permits for the last few months. If their confidence is up, that indicates good things leading-wise, too. The other number that comes out every year, this is also good for the home building side, the mortgage applications index, unexpectedly up. It gained 1.4% last week, and we all went, hoo-ha, at the very least it's positive. This week, the mortgage application index up 14.2%. And the really interesting part is the purchasing index up 5.4%, and it was an absolute gain over last year on this date. So we actually have an increase from last year instead of just the index going up.
Well, yeah, and I think a lot of that has to do with they're saying that the interest rates are at a 2-year low. So I think that's probably some positives to help people buy and refi that need it. Especially, if credit card debt's an issue or personal loans are an issue, those interest rates are still running 20 to 30 to over percent. And so if you can refi at 6, well, that's a pretty big savings.
Oh, absolutely. And the refi index was up by 24.2%. So that dip to the prevailing national 30-year mortgage rate of 6.15% obviously freed up a little bit of money, and a few folks both refining to pay off their bills, plus a lot of new purchase increases, too. So on balance, I'm calling it a relatively good number, although refis, you and I both look at saying, oh, my God, that means they're in credit card trouble, right?
Well, yeah, at this point, why else would you refi? Because if you bought a house, during this whole last probably almost 10 years, probably, you have a mortgage rate of less than 5%. So why would you go refi at a higher rate if you didn't have credit card debt or some other issue that you need to take care of?
Absolutely. I mean, I look at 6.15% and say, holy crud, because I kind of got lucky and I caught close to the bottom, refinanced my place at 2.9 something back a couple of years ago. But then again, on the absolute scope of things, we've had home mortgage rates as high as 8 and 10% over the years, not at these absolute price levels, but still. We're normalizing and we're going down, and that's all good news. The big news for the day is going to come at 2 p.m. this afternoon, and with the interest rate decision. And one of the things that came across my news ticker that kind of gets into the stuff that you and I were talking about earlier, futures markets are currently giving a 65% chance of a half-point rate cut to this afternoon. If they do what you and I think is smart, this is going to be a real seismograph about 2 o'clock when that number comes out.
Yeah, it will be. And that's unfortunate, I think, that could move the markets more than you and I think it is. And I saw a headline. I was trying to re-find it, and I scrolled past it again. But it basically said that there could be a lot of traders in trouble if we don't see a half a point decline.
If 65% of them think the rate's going to go down that much, your point's taken. If they do, the quote-unquote smart thing, again, economics living in a vacuum, the smart thing would be 0.25%. It's going to be kind of interesting to see what the reaction is because, like you said, a lot of investors have been pushing their clients into looking at a half-point cut and anticipating that. The optimism, though, is kind of notable. Last month, the investor optimism figure was showing that, more people expected a soft landing from this inflationary spiral. But last month, more also expected a hard landing, and an increased number expected no landing whatsoever, just continued high inflation. This month came out this morning, Bank of America surveys the global fund managers. Fewer expect a hard landing, fewer expect no landing, and like 80%, 79% to be precise, are fully expecting a soft landing now for the economy. That does indicate some faith in what Powell is doing at the Fed, even if we don't get what we might agree would be the intelligent thing to do.
Well, that's right, and we both agree that if he can manage a soft landing, he may very well deserve the economic award for this year, the Nobel Economic Award for this year, because that will be a feat that nobody else has been able to do.
Yeah, it's absolutely. I don't think it's ever happened that we've managed a real soft landing. I mean, we had last year what we had a little fun with because the politicians disagreed. We had what, by definition, was a very, very mild recession, 2/4 of like 0.1% decrease in the GDP. And if that's our definition of the token recession while we do it, hey, Paulson deserves the Nobel Prize in economics. It's also going to be of note we're going to have two seismographs. Number one at 2 o'clock when the actual decision comes out, but then at 2:30 when Jay Paulson takes the podium and actually answers questions. And if they do a half point, he's probably going to have to do a major podium-pounding speech saying, no, this doesn't mean we're heading into a spiral. We're just optimistic. And it's going to be interesting to see if he can sell that point of view.
It will be if that's where we come down. I think I'm still on the other side of the path, hoping that we just land at 1/4 point because we still got time this year. Let's get through the election. Let's find out what that looks like. And then if you need to lower interest rates more between now and the end of the year, you've got at least 2 meetings you can do that.
And that's the thing that needs to be considered, too. I mean, we've got two relatively opposing economic philosophies running for president, and we're looking at less than a point worth of public opinion as far as potential vote in the swing states is concerned. We don't know who's going to be elected. Generally, when you look at a more activist government that's going to be in a more stimulative fiscal policy point of view, which generally is a fair reflection of the Democratic view, the Fed's not going to want to have boom time low interest rates going if we end up spending a lot more out of Congress. On the other hand, if the Trump train wins it, there's going to be a war because President Trump has made it pretty clear he really wants to take Jay Paulson out and whip him to death. So they don't know what's going to go on. Being discreet is probably a good idea. Just looking at real politics too.
Yeah, well, that's true. It's going to be interesting. That's no doubt about that.
And you and I kind of have gone off far afield as far as guessing what's going to happen. We'll find out this afternoon and talk about it in the morning. Again, it was a mixed day yesterday, largely on the grounds of the Dow getting whacked by Boeing. 45 minutes before we open this morning on a what's going to happen day on Wall Street, what do we look like?
We've got a little bit of green, not much across the board. The Dow's up a little over 0.1%. As well as the S&P 500 up a little over 0.1%. The NASDAQ 100 is up just slightly over 0.2%. On the other side, we've got silver even this morning, no change. Gold is up 0.3%. And then crude oil is down 0.6, about where it was yesterday at $69.54 a barrel.
I'll take it under 70 anyway. Overseas markets, the Asian rim mostly up. For some reason, Taiwan, I think there's some saber rattling going on with mainland China. Taiwan took a bit of a dump this morning, but everything else was up over in the Asian rim. European markets generally relatively optimistic across the board. Just got an update. The UK just took a little bit of a turn to the negative. On balance, we're looking at about a 0.2% green market so far in the European community this morning, halfway through their day. I should make mention my fear and greed index this morning swung toward modest greed, so they're optimistic for a big bump in interest rates downward, I suspect. Getting a plan for retirement counts a lot for all of us. Matter of fact, it's kind of one of those make-or-break decisions you make in your life that could last for the rest of your life. How do I find you to get that plan to make my retirement happen, Phillip?
Then give us a call at 863-382-0037 to schedule their core retirement analysis, where we'll make sure that they've got a plan in place for the retirement they always dreamed of. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here tomorrow morning with a look at what the heck went on this afternoon and what's likely to affect your money tomorrow right here. I'll see you then.
All right, man. You have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope as we hit the middle point, you're doing well. Join us again tomorrow, same time, same place. Until then, have a great day. Bye now.